And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talk. Today's episode will be a little bit like the one I did 3 days ago. So I'm going to try back to get to weekly, live streams again after a little bit of a hectic, buzzy period. Now, let's get started. Let's take a look at the current state of the market. Hold on, I'm going to start sharing my screen here. There we go. And there we are. So once again, you guys can see here on screen. I'm going to verify something. Yeah, that's not good. It needs to be like that. There we go. As you guys can see, it is slightly older chart. Going from a few weeks ago, we had a little crash here from 22k levels. I'm going to start zooming out. August, June, July. Why can't I go further? 6 months. There we go. Zoom in a little bit. So it is the crash which occurred some time ago. What am I showing here? Well, 3 days ago, I've drawn these two lines. I'm going to start zooming in to indicate here where we are at in trading range. It was an estimate, so do not pin me down. This is not financial advice. However, as you guys can see, there was quite some volatility here, seemingly a breakout. However, I do not dare to call it a breakout by reason, well, it's an average trading range that I estimate where we are currently in, with the low part of the trading range somewhere 18,850 based on previous lows. I believe if you zoom out even more, you can exactly see that for since September 6th even. Yeah, since September 6th, at average about 90% of the trades occurred in between these two lines. However, if we start zooming in a little bit, especially in the last couple of weeks, there we go. From 8th of October, day I got married, EPA. And up until now, you can see that the majority of the trades has been going on in between these levels. A little dip down below, that was a good opportunity to DCA in, but as you guys can see, it immediately veered back up towards a higher level to compensate, did low, slightly above the average trading rates, etc., etc. But as you guys can tell, the market has been going sideways for quite a while. I could draw additional lines and say, look, heavy resistance here, probably more near 20k level, slightly above 20k level. Highest that I can see here is about 20,300. Seems to be the major resistance level, but it is a boring market. If we were to draw an additional line, or even if we respect the drawn estimated range line, you can see quite clearly this is a boring market that we are trading sideways. So not much is really going on. The only thing I can tell is try to draw your very own trading range. Try to see and do it slightly better than I do where it is supposed to be. And I might even say that I would, can I delete it? Yeah. If I were to be complete in drawing my ranges, I would say that this is approximately our trading range currently ongoing. You guys can see we are in the middle. However, that's a line you need to see on a longer scale. And you can see, well, we are doing fine. It is, well, a boring market. And if we zoom in, I'm going to head over towards the daily chart. There we go. Some volatility going on. Actually, if you zoom in and out, you can see all the trend lines merging. But as I told you guys, it is a bloody boring market. It's a 5-day trading range. So as you guys can tell, there is some volatility, but always keep moving, always zoom out. And you notice it is a sideways trading market. So kind of boring, not much going on. Not much going on. Naturally, I have chosen a few articles which might be of interest. Now, first one here, FTX US wins bid to acquire bankrupt lender Voyager assets. Big news, FTX has been gaining some light through BitBoy of him naturally bashing on the CEO. That withstanding, this implies that the bankrupt lender Voyager assets are going to go towards FTX, and that it might increase some volatility on the cryptocurrency markets, that a big part of the assets currently under the bankrupt lender Voyager will be moved towards FTX. You can rest assured the Bitcoin is going to be moved towards the FTX reserves. FTX wins the bids, recovery plan. Didn't read the article in totality, but let's do it here. Earlier reports suggest that FTX.US is offering a recovery plan that would return about 72% of Voyager's customer funds. It is worth noting that the deal, however, cannot be completed until U.S. bankruptcy judge Michael E. Wiles grants the bankruptcy payout plan, which is expected as soon as early to mid-December. So basically, volatility to be expected starting in December, when the deal has been rounded and that the bankruptcy judge grants the plan, gives his okay for it to go through. That's basically it. So future-wise, might expect perhaps some movement on the markets based on this one. Next up, Binance US hires the most feared man on Wall Street as its head of investigations. Now, people who follow the crypto Twitter and crypto markets quite often will have heard of BitBoy, and I mentioned it with the earlier article going on about the FTX CEO and laws and regulations. And well, he really had a major meltdown on video. And at the same time, he voiced his trust in Binance. Myself, I'm not all too trust. Well, I do not have all too much trust in Binance. And seeing this article merely cements my opinion once again, meaning they are now hiring someone from Wall Street. Wall Street, is that entity, financial entity, I'm going to say, that broker those exchanges which play the classic market. Seeing a big exchange like Binance hiring a literal pit bull for its as its U.S. first head of investigations, that's kind of shady. This isn't a move that might not be in the best of interest for crypto, but which is in the best of interest for Binance itself. And I'm going to revoice my opinion where it concerns Binance. I am afraid these guys are creating a monopoly within the cryptocurrency market. In the past, and I'm really talking about the bull run of 2021, they have voiced to always and to try and always be in compliance with ongoing national regulations and law giving, meaning they are playing a role in regulations that are to be implemented. This once again cements that movement. So keep an eye out for Binance. Do watch out. I do not trust these guys. Now, the platform itself is nice for trading. BNB coin is a handy thing to have in your portfolio if you are an active trader and want to swap with a variety of BSC coins and tokens. However, the platform itself and the entire management behind it, I am wary about. I do remember these guys when they started as being semi-decentralized. With recent moves after the recent bull run, getting more and more convinced they aren't as decentralized as they marketed themselves to be. Especially titles like these, I'm not entirely convinced. So this is good news for Binance speculators. For the crypto market, we shall see what this guy will do. Especially in the local American markets, but naturally we're talking crypto here. It will eventually reflect upon the entire crypto market. Do watch out with this one. Ripple obtains Hinman documents, optimistic about the SEC case. So, like you guys know, Ripple itself has a lawsuit against them, instigated by the SEC. It has started in 2020, and a lot of the Ripple community members said that it's, well, pushing the value of Ripple down. Now, myself, I still think Ripple is a shitcoin. I do not see some added value with the coin and its entire makeup, its entire build. To me, well, is untrustworthy. But that aside, there might be some bullish news for the Ripple holders in the sense that they finally obtained the Hinman documents. Now, what are these Hinman documents? Well, it's nothing more than a little speech and some communications with the Ethereum Foundation. Currently, the entire defense of Ripple relies on these documents in the sense that Hinman itself, the guy who gave the speech, in a nutshell, I might be slightly wrong here, but sorry, it really comes down to that those documents provide statements about Ethereum, whereby Ethereum is being seen as decentralized. The entire Ripple defense, well, not entirely, but a greater part of it, relies on the statements made in those Hinman documents, and they want it to reflect upon their very own company, on Ripple itself. Now, anyone who pays attention and isn't blinded by marketing talk and actually knows its fundamentals, Ripple and Ethereum are fundamentally different in build, distribution, and general makeup. In the sense that, well, Ripple is a token, Ethereum is a coin. By reason, Ethereum has its very own blockchain, which distributes its very own coins over time through algorithmically steadfast rules which cannot be changed. Ripple, on the other hand, created a blockchain, its Ripple Ledger, and actually created a token called Ripple, and then programmed those tokens to be distributed through, what's the word again? Yeah, through custodial wallets, if I'm not mistaken, if I'm saying this right, and distributed also by making use of algorithms. However, major difference here is the community of Ripple can vote to burn the remaining locked liquidity held by Ripple itself. This in contrast to things like Ethereum and blockchain, whereby everything has been algorithmically fixed and whereby you need mining or validating in order to receive Bitcoin or Ethereum, well, that is newly minted. Ripple, everything has been pre-minted and is being held in custody. But by making use of an additional layer of programming, they create an algorithm whereby on fixed points in time, a part of Ripple is being distributed. So there's a fundamental difference between the two, meaning that, well, with the obtaining of the Hinman documents, nothing really changes. Ethereum and Ripple are two different entities altogether. Even their use case is entirely different. Ethereum is a development platform, whereas Ripple, well, it's trying to put its use case as sane money, but in my opinion, it has more in common with a central bank digital currency. By reason that the remaining locked liquidity is being held in custody by a trusted third party, being Ripple itself. So you can see where I'm going here. Ripple is more centralized. I know the community doesn't like to hear it. Whereas Ethereum, despite it being a blockchain project, I neither have all too much love for, but Ethereum being more decentralized due to its use of validators, and before the merge, its decentralized community of miners. Anyway, like I said, This might sound bullish to the Ripple community. In my opinion, I don't think the obtaining of the Hinman documents isn't going to change much. By reason, they are going to try to draw lines and parallels with Ethereum. However, recent news, the SEC did mention that now that Ethereum is post-merged, so now has transitioned towards proof of stake, they might be considered as a security. So taking that into account, it might be the case, well, it will be the case that the obtaining of the Hinman documents is, well, smoke and mirrors. Nothing changes at all, and they are still at the whim of the SEC. So, yeah, they call it a turning point. I'm going to say probably not going to happen. This is hopium at best. I mentioned this article in the episode of last week. Bitcoin hash price at all-time lows amidst dismal miner profitability, meaning the hash rate is reaching new all-time highs for Bitcoin, meaning that the Bitcoin network never has been as secured as it is now. Now, in the previous episode, in previous live stream of 3 days ago, I mentioned you will see on a regular basis that the hash rate of Bitcoin is reaching new all-time highs on a more frequent basis. And, well, nothing changes here. This actually is once again confirming that hash rate is going higher, whereas the price, as you guys could see here, remains, well, steady within a certain trading range, meaning with a higher ongoing hash rate compared to its price, well, you come to this conclusion. Now, this article and this kind of news is actually a little bit of FUD. It almost seems to imply that Bitcoin isn't as profitable anymore. However, what we do have is a very challenging market, meaning profitability is indeed at quite a low level, probably at its lowest considering the high hash rate. However, this is a period in time whereby innovation wins, meaning the miners now will do anything and their best in order to increase their profitability, not by switching off miners, but by investing in newer, more stronger, more better miners with a lower energy demand, but with higher hash rates. Other innovation is that they probably will be looking for ways to cheapen the costs of mining, meaning they will probably be searching for means for renewable energy to invest in and have that renewable energy fed towards their miners. So that's innovation going on. And from a purely economical point of view, they aren't exactly lying, but at the same point, there's another side of the coin. The other side of the coin being there's innovation going on, innovation being forced upon the miners to increase their profitability by either going entirely renewable or to invest in much stronger miners. So in a sense, there's some positive news going on here. That's mostly where it concerns hardware. Not a bear market casualty. Crypto staking platform Freeway pauses withdrawals. List of bankruptcies, shutdowns. So Freeway pauses its withdrawals. For that, I'm going towards my very own profile, and I'm going to highlight. That's for later on. Going to highlight something. Where is he? Freeway was some sort of lending platform. Like that. Yeah, I've got to look it up a little bit. No. Perhaps. Yeah, this is my own Twitter profile. Isn't as bad as you guys can tell. It is being established. Damn, I'm going to open this one for later on. Going to share a little trading lesson. So that's the article I shared. Here it is. Now, this little article, little tweet from Otaru. Back in June, he made the prediction. And, well, as you guys can see, not a bear market casualty. Crypto staking platform Freeway pauses withdrawals. The pausing of withdrawals is generally bad news. It means, or is a first indication that the platform is having liquidity issues. And this is actually a little tweet put together by Otaru, who invested into Freeway FI. This tweet is from July earlier this year, and basically he warned against, well, we will be seeing problems with Freeway itself. Main reason, way too high APR being mentioned. Those are average percentual returns that you can have on your investments. And as he said, 43%, that implies over leverage. During a bear market, liquidity is everything. If you are promising way too high returns on the investments, the platform itself might get into liquidity problems. And this is actually what happened with the Freeway platform, as predicted by Otaru in July earlier this year. This is the same problem which occurred with Celsius Network and 3 Arrows Capital, which gave rise to, well, let's zoom out here. This is, Terra Luna, and this crash was the combined efforts of Celsius Network and 3 Arrows Capital. So the liquidity shortages leads to bankruptcy, halting of withdrawals. This is, well, textbook crash down of Freeway. Perhaps they can pull through. However, from what I'm seeing, I have my doubts. As far as a little crypto lesson goes, so this little tweet from Crypto Rover, I am quoting, little trading lesson here. So he says, Bitcoin breaking out, and sharing this little graph. You guys might tell, oh yeah, it's breaking out, that's great news, that's great news. Now, I'm going to show you guys something. I'm going to start drawing lines and why you need to pay attention. You guys can see he has drawn here a little imaginary line, and you see Bitcoin broke out. I'm going to do the same bloody thing here. There we go. So it's somewhere June, July. I'm going to put it here. And naturally, I'm going to put it like this. To do this away. Can I? Yeah, I'm going to start zooming in. I'm going to do it slightly differently. There we go. So let's just draw an imaginary line and say there's a breakout occurring from this point, and there's an imaginary line I'm drawing like this. And you guys can tell there has been a breakout since the ascending triangle, September, what is it? 13. Breakout occurred. We are now trading at a higher level. No. We're trading sideways. By reason, I've drawn this line. Look what I can do now. Same element. And just adjust. What do we have? That's common volatility. That's not even a decent breakout. You see, you can adjust the angle of the wedge itself. And sure, there was a little breakout, but same occurred here, here, and here. And you can see it all fell back. In reality, you do not need to rely on such angles and drawn lines. You need to recognize patterns. And you can tell here, that's from September 12th, little crash down. I zoom in and I go like that. What do I see as a pattern? That we are in a sideways trading market. And that's one of the reasons why I always point out to all my students, do not rely on such graphs. Zoom out. Be on your guard. My reason, zoomed out a little bit, zoomed in a little bit, and I see sideways trading. I zoomed out, that's the wedge that I used, and god damn it. Line pattern, 6 months, no, year to date. Where is he? Okay, something icky is going on. Let's refresh the page, because this isn't really showing what I wanted to show. There we go. We start zooming. Oh, it's 30 minutes. There we go. And if we start zooming out, you can see we are in a sideways trading market approximately. I just need to adjust a little bit here for trading. That's much better. And you guys can tell we are actually in a sideways trading market, especially since September 13. You guys can tell there is some volatility, but we are trading sideways. So if you're seeing things like this, there's a breakout. Nah, that's just a point in time that I've taken, and you can adjust the angle depending on how I take it here and how far I take it here. And sure, you might say, yeah, there's some truth to it, because the line that you've drawn, there you go, starting from here somewhere up until this point, we had a little breakout. That's true, but if I adjust the angle, the same can be said here and at this point. I mean, it isn't really all that difficult. Come on. On the line, I could say, okay, yeah, breakout like that, and breakout like that. I mean, you can play with the angles, and there isn't a real breakout, because if you zoom out at the entirety of the market, you see it's going sideways. So don't fall for the hype. These are influencer tactics in order to hype up their crowd. So be always on your guard. With that, I'm going to stop sharing my screen, and I'm going to slightly end this episode. Thank you guys for watching, and if you have questions remaining, you can always call out on Telegram to me in the Crypto Belly group, or down in the comments below, or reach out to me on Twitter. With that, thank you guys for watching, and until next time, bye.